So a couple of you have asked me to do a little deeper dive into individual stocks and what I'm looking at or what I've bought and what the strategy is and the thinking behind it. So I'll dive into that a little bit today. I'm going to focus on the Canadian market and how I go about that and how we build a portfolio, uh, basically starting from where we all should be right now is mostly in cash. So I'll dive into that in a minute. So first off, the market in general, since the update from the video a couple of days ago, this is again, the S&P 500 daily on the right, weekly on the left. And if you recall on Wednesday's video, we were here after 3 days down, and I was suggesting that we could reverse from here and go higher, and I was getting very bullish if this would happen. It didn't, but I'm actually getting more bullish as a result of the last couple of days. So Thursday, we opened down, closed near the high, so that got me thinking this is good. But then the next day we opened below the previous day and then closed down near the lows. So we're still not ready yet. But what's happened is that we got really extended from the 50-day moving average, and now we're getting closer to it. So as long as we hold here and then rip back up from here, it's actually better probabilities than we had a couple of days ago. Going to the weekly, this is what's called an inside week. So the previous week was a fairly wide range bar here. I'll spread this out. It opened down here, went as high as 444, closed down here. And then this past week, just traded within that range. This is highly constructive. And in fact, if we could do another week with a very narrow range, would even be more constructive, as long as we don't whoosh down. But even a whoosh down here to the 10-week moving average would not be a bad thing. But we'll just see what happens this week. So that's the S&P. Looking at the QQQ, it's basically a similar story. We now have 1, 2, 3, 4, well, 3 lower lows. The QQQ's put in an inside day, so it didn't actually take out the low of Thursday. So it's looking like it wants to turn. But if you look at the equal weight of the QQQ, it paints a bit different picture. It's actually much more negative. Well, negative in the sense that it's gone down faster than the QQQs, but positive in the sense that we've now closed the gap on this 50-day moving average quite considerably. So we can get in with a lower risk for our stops. A change that I've made on here, just because I'm going to be talking about Canadian stocks later, is instead of having the SPY up here as my comparative tool, I've used the Toronto Stock Exchange. And you can see here from basically last April when the Canadian market peaked, it's been just going straight down. Whereas the US market, since that period, went straight up. So this is why I've been harping for some time now that the Canadian market is just not a place to be. Avoid it. This time will come, but it's just not quite ready yet. Although, as we'll see in a few minutes, there are a couple of potential stocks that are worthy of looking at, but the market in a whole is holding things back. So that's the Qs. The Dow has pulled back as well. These drawings here I put on here about a couple of weeks ago. It was what I was thinking would happen or hoping would happen, and it's actually playing out fairly closely. So I'm hoping now that we will indeed hold around here and then go back up later in the week, and in which case it's time to get quite bullish. I mean, right now I'm almost all cash. My trading account is 100% cash. My US RSP and tax-free savings is only 20% invested in one position. And Janus's Canadian RSP and tax-free savings are 100% cash. So just patience. Just quickly looking at the small caps, it's kind of messy. This is really, it was looking pretty good in here, and then we just fell apart. So this needs to settle in a little bit. And the mid caps, basically the same story. A little more orderly pullback. So anyway, that's the general view of the market. For some of you that actually in your Canadian accounts trade the S&P 500, there is an ETF. The symbol is VSP on Toronto, and this mirrors the S&P 500. So if you're not wanting to convert some of your account into US dollars, and yet you still want to trade the US index, this is a good instrument to do it. And I know there's a couple of you that are following this. I put now remember, I'm not a financial advisor. I don't make recommendations. I'm just doing this for educational and entertainment purposes, giving you my viewpoint. So don't hold me to it. But a few weeks ago, I suggested right about here, I think it was in May, that that this would be a good time to open a 25% position in the S&P 500. That's been working. And I said you could probably add to that. I think it was around here sometime. I don't have my notes. So you can get up to a 25% position. And so far that's doing quite well. Now this pullback here is kind of interesting. If we were to go, I get my tools to work here. If we were to go above on Monday, if we were to go above Friday's high, you could enter. I would put the remaining 50% in the VSP for the US portion of your portfolio. But the stop for that particular stop line would be underneath Friday's low. So it's a really tight stop. I don't know what the risk is here, but it's probably only from here to here. It's like less than 1%. So to me, it's a good risk reward, because if we hold, if we take out this high, this low should hold, and now you're fully invested. But I would have a protective stop under here. For these two positions, you still hold those, so you're still 50% invested. One stop could go under here or under these moving averages, depending on your risk tolerance. But anyway, that's how I play that. So let's talk about the how to build a portfolio. Like I say, I'm going to focus this morning, I'm going to focus on the Canadian stocks. And if time permits, and I get my head around it, maybe later this afternoon I'll do one on the US side. But I'm going to start tracking what I'll call a model portfolio, but really it's going to be Janus's Canadian dollar accounts, and then my US dollar accounts, because we're right now pretty much 100% cash, and then how we would go about selecting stocks and managing the portfolio. So I'm gonna build a hypothetical, well, it won't be hypothetical, but $100,000 Canadian portfolio and $100,000 US portfolio. And the goal or the strategy would be to have preferably no more than 4 stocks at any one time. And if it were a full position, that would be 25% of the account, or perhaps 5, depending on the. I'm going to probably go with just 4. 4 is easy to look at. And if something makes a meaningful move, having a quarter of your holdings can make a meaningful impact on the total value. And we'll show you where you put your stops to protect the downside. So that's that part of it. So I'm just going to flip gears here. I'm going to open up a tool. I use this because I haven't been tracking. I don't trade much in the Canadian stocks, but I did found a useful service called StockCharts.com, and it's really cheap. It's like $25 US per month, and has a pretty good coverage of Canadian stocks. It doesn't have a lot of fundamental data. The site is kind of it's the learning curve is fairly steep on it, but it's an extremely useful tool. Anyway, without belaboring it, what I did is I built what I call a Canadian watch list. There's I pre-populate with 146 stocks, and I can't remember exactly what my parameters were to build this, but that's my basic watch list for the Canadian market. And then this particular summary here shows the price, the change, percent change, the volume, what's the market cap. And this has what's called a scooter, they call it a scooter rating, which is basically their stock charts trend rating, what sector it's in, what industry it's in. So this is my starting place. So you can go through this all 146 alphabetically. Up here I have a weekly chart on the left, a daily chart in the middle, and a 130-minute chart on the right. 130 minutes being every day contains 3 bars, although this is what's called a line chart, so it's not a candlestick chart or a bar chart. It just shows the closing price. But I don't really trade off this. It's just basically a quick and dirty mechanism to see if I'm interested in a stock or not. So you could go through these all alphabetically, and clearly this is one I wouldn't be interested in. It's down on all time frames. But to speed up the process in the weekends, I just simply do, I go to the scooter rating and I click that, and it sorts it for me with the highest scooter rating to the lowest. And then I pull out from this list anything that has a score of 85 or more. And that becomes my sort of secondary list. So you could do this any numbers of ways. You could do, if you're interested in really bottom fishing, you could look at from the bottom up. It's not something I would do, but it gives you lots of different ways to sort things. So we'll go back to the scooter rating, the highest to lowest, and I pull out ones with 85 or greater, and I put them in another list, which I called the June watch list. And that narrowed this list down, the first list down to 38. And so then what I do from here is I can go through 38 a lot quicker. And if I'm interested in it, I will put this in a third watch list. I just pull this out and you can add it to a new watch list, which is called, I just call this one my Canadian stocks for July 23rd watch list. So now I was able to take this list of 38 down to 17, and I will study them in more detail, because we're refining the process, getting down to the best prospects for this next week. So at this point, I'll come out of this program because I need better charting. And I have put those 17 on what I call right now a Canadian on deck list. So those 17 stocks are here. And so then what I'll do is just go through each of those. So now, like, very quickly, I've gone from 146 down to 38 down to 17. And I only want to focus on these ones for this week. And then even 17 is way too many to watch. I want to get this down to 2, 3, or 4, depending on the status of the market, so that I could keep very focused. Because at the end of the day, we're only going to end up with maximum 4 positions in the portfolio. So there's no point in following 20. You want to zero in on the absolute best of the best of the best. If you're only going to have 4 stocks in your portfolio, you want the 4 best ones, which you deem as best, depending on your strategy. So I'll just quickly go through these and show you how I look at it. First one is Air Canada. And again, at the top here, we have the Toronto Exchange, the XIU, the TSX 60, and how it's performed over the last several weeks or months. And then you can see how the stock is doing. So this Air Canada is clearly doing better than the market as a whole. But then I'm going to go, first thing I look is at the weekly. So I'm just going to scrunch this down a bit. So we got at least a couple of years data here. And you can see the prices here, but I immediately look to the left and I see all of this congestion over here. And I say, okay, I'm not terribly interested in this. One of the things I want to focus on, I want to look at a stock that's got a pretty good probability of going up 30, 40, 50% in the next 5 to 6 months. And I look at Air Canada, and if I was to, go back, even if it gets back to the post-COVID highs, that's $30 from 23. It just doesn't meet my criteria. And so I'm going to take a pass. There's too much junk here to the left. Next one, ATS. Now, this is a brand new IPO. We just went public in November of last year, so it don't have a lot of history. So that makes these tough. This daily pattern is looking okay, but these bars are very wide. So for right now, I'll just keep an eye on it, but it's not going to be this week's attention. Cascades, I actually owned this one back here, and then did sell out of it. But when I recognized that there's a lot of traffic over here on the left, so it's no surprise when it ran up here to $12, 12.5. All the people that were in here saying, oh, thank God I can get out break even. So it's going to be really tough slugging. So I'll pass on that one. Cameco, this is interesting on a weekly chart. Big up, big down, big up, big down, big up, less down, big up. Okay, where's the less down? So it just needs more time, but we'll keep it on the list. But not interested this week. Celestica, I think I did own this one too for a little bit. But again, it's run up so fast, it needs to correct. It needs to settle in before, this is just too risky, too volatile. Finning International. This is interesting. It came up to 40, didn't like it. Came back up to the 40 range, didn't like it. Up to 40, didn't like it. Came back up to 40, didn't like it. It's come back up to 40. It's hanging around here. So there's obviously a big seller in around the $40 range, but if he's done or he or she's done, this could go a long ways. So this will go on my list for next week. I'm going to move this now out of this list. I'm going to put it in my Canadian focus list for this week. And I'll come back to this, what I'm going to do with it. GFL. Again, here's the high from back in November 2021. It's struggling to get through there. This was something to definitely keep in the list, but I don't see this being actionable this week. And if it does rip out of here, we missed it, so what? There's lots of others. Ivanhoe, I don't like mining companies particularly. This one just run up here. I just don't see an entry that has a risk reward. A good entry would be this one around here. If it clears this sort of supply area here, so you're entering around 1280, something of that. But where are you going to put your stop? It's more than 10% away. So that doesn't meet my criteria. London Mining, same thing. Look up to the left. All this, everybody over here is anxious to sell and get back to even because they suffered a big loss here. So that's not going anywhere. NFI, I have no idea about them, but look at this. It's come way down. This is really a bottom fish. It's just now crossed above the 40-week moving average. So this has potential if you like this kind of thing. You know, it's going to have a lot of resistance here between 12 and 14 bucks. But you know, this is, I don't know what they do. It's worthwhile looking into this one, but just not this week. Open text. Same thing here. I did own this one here, and I think I had to, I can't remember what happened here now. It was after here. I got out of it right up around here somewhere when it tested these highs, and then thank God. But that's no surprise because again, you look to the left and there's all these trapped buyers over here. So this needs to settle down a little bit. PXT, Parex Resources. I think this is oil and gas, which I'm not keen on, but the pattern is looking decent. It came up twice now. It's tested here. We're up to 29. It's testing it. So keep an eye on this one, but not this week. Russell Metals, again, come up. It's got a lot of supply here around $37, $38. So at some point this is going to get interesting, but not this week. Stella John, I have no idea who these people are, but this has run up like way, got a little parabolic, so it just needs to pull back a little bit. So interesting. Unfortunately, with stock charts, I haven't really looked into their fundamental data, you know, what the company does, what the revenues are, margins, all that kind of stuff. So if it doesn't trade on the US market, I'd really have a hard time assessing the values of these companies. So no interest yet. SNC-Lavalin, getting there, got up here, had a big spike here. This must have been an earnings day or something, but then it just gave it all back. So on the list, but no interest right now. Stantec, really good pattern, really holding on to these gains at these all-time highs here. I just have difficulty knowing an engineering firm that's going to double in value or go up by 50%, but this is a pretty good pattern. So it might be tradable here. So I'm going to look at this one with more depth. And then last one on the list, West Shore Terminals. So again, it's having problems. Came up here, stalled. Not unsurprising because you got all of these trap buyers in here. So as soon as they're done selling, so you got these people that want to sell that bought here. You got these people that bought down here who are looking to take their profits. So as soon as they're done, there's indications they're done, and this starts to turn back up. This could be a worthy trade. So I'm going to add that to the list. So after all that, then I'm down to like 3 stocks that I want to focus on this week. So how would I go about trading / investing in these? Well, this one's pretty easy. This one is there's a clear downtrend line here that we want to break. It's hit the 50-day moving average. This is a logical point where any institution that owns the stock would be looking to add some more. So there's going to be you would expect there would be institutional interest here. So my strategy for this one would be I would enter this on a break over Friday's high, and I would put my stop under Friday's low. So really, really tight risk reward. So in my case, it would be a $25,000 position stock. The entry price would be 30.84 was the high. So say 30.80 is the entry. So give it a couple of pennies extra for slippage. So 30.90. So 25,000 divided by 30.90 means I could buy, my calculator's not working. Dang. It's probably about 800 and some odd shares. Don't know why I'm at. So I'd put a buy stop order in here if it trades above 30.85, and my stop would be 30. The low of the day is 30.37, so I gave it 30.35. So we got about 6.55 cents a risk on what, 800 shares. So you're risking about $400, and just see where that goes. So that'll be high on my watch list for Monday morning. Stantec, probably a similar kind of entry. I'd be looking for a break of this downtrend line here. I wouldn't necessarily be buying it above the high. Definitely the stop is below here. 80, what's that? 80, the low of 82.40-ish would be the stop. The entry, this may not trigger on Monday. I would like to see this actually give this a couple of days. What I'd like to see is this tighten up here and then go up. And then that would give us a safer entry if we consolidate here for a couple of days. So that's what I'll be looking for there. And then FTT. Similar story here. You've got, if this goes above Friday's high, which was $40.25, your stop is below Friday's low, which is $39.24. So it's basically a dollar risk, which is what on $40 stock is about 2.5%. So that certainly meets my criteria. That would be my plan for this particular one. So enter over here and immediately place your stop underneath here. So that's probably more than a lot of you wanted to see, but I know there was a couple of people in particular that were asking for this. So let me know what your thoughts on that. So precious few things in the Canadian market that are of interest, but I was surprised there was these three look pretty good. And perhaps this afternoon, once I do a little more scanning, I'll come up with a similar approach for the US side of the market. Okay, thanks everybody. Have a good weekend.